Save tax and reduce the chance of a HMRC investigation by getting your documents together early, so on the 31st of Jan, you don't panic and start putting random numbers in the boxes, and then when HMRC launches an investigation, you don't have any backup. So let's get them numbers correct first time. Remembering, tax years run from the 6th of April one year to the 5th of April the next year. So depending on what tax year you're doing your tax return for, you want to make sure all your income and all your expenses is incurred within that tax period. So the most common mistake that I see is people putting random expenses in the wrong tax year. And then, of course, if HMRC investigates, they ask you for the invoice, you present them with an invoice that is for the wrong period. That is going to cause a problem. So when we're UK resident, we are taxed on our worldwide income, meaning we need to include everything in our tax returns. So that may be bank interest, it might be child benefits, dividends, everything that we have, taxed or untaxed, needs to go in this tax return. So let's go through some of the most common pages that we need to be collecting information for. So the employment pages. Now, you're going to have to fill these in maybe if you're a company director and you take out a small salary, or maybe you're self-employed and have a small job as well, or maybe you've become self-employed and you've left employment during the year. So the employment pages. Things we'll need to collect either from HR, our accountant, or Xero. P60, which is your end of year pay. So that document is going to have the amount of income that you earned in that employment during the year, as well as any tax you've paid via pay as you earn already over to HMRC. P45, if you've left your job during the tax year, then you will have been issued with a P45 on leaving. It's basically got the same information as the P60 has on it. It has a summary of the amount of income that you earn during your employment, as well as any tax you've already paid over to HMRC via pay as you earn. Then we have P11D benefit in kind forms. Now these are on the way out, but you might get one of these if you've had an untaxed benefit during the year from your employment, something like a company car, which needs to be taxed. Self-employed pages, obviously we need a summary of all the income that we have received from our self-employment during the year, as well as all the expenses that we've incurred, so we can get a tax deduction for them. Now I'm not going to go through line by line of them because I feel like we all know. So I'm just going to go through the most commonly missed ones. Training costs. So make sure you're claiming a deduction for any training you've done during the year. That is for the benefit of your business. Don't just leave it out. Office costs. So if you use your home as an office, maybe you do a couple of days from home a week and a couple of days from a real office, then you're going to be able to claim a percentage of your household bills back as a deductible expense. So things like heating, electric, council tax, rent, mortgage interest. There is a certain calculation you need to do for this. If you'd like that and want me to go through it in detail, I can. There's also a capital gains tax point, which is important to get on this. So if you want more info, happy to do that. If you can't be bothered with all that hassle, then you can claim a simplified expense, which is kind of a HMRC rate, which they have decided is a fair rate for a tax deduction for people working from home. And it's based on the amount of hours you work from home in your self-employed business every year. Travel costs. If you maybe travel to client sites quite regularly, then you want to be claiming a deduction for the costs of your car. So things like fuel, parking, emissions charges, repairs, services. These can only be claimed when you're traveling to client sites. So it can't just be if you're traveling from your home to your office. It can't be a permanent workplace, basically. It has to be to a client site or to somewhere for your business that is not your office. And if you can't be bothered with all of that, you can again claim a simplified expense. This expense is based on mileage, so depending on the amount of miles that you travel to these client sites, then you just get again a set rate deduction. Happy to go into the simplified expenses in a bit more detail, show you the calculations if anyone is interested.